Welcome back to Investing Talk podcast. Today, we're tackling a really interesting one, a stock that's generated a ton of buzz, Kindly MD. And the big question, the one we're focusing on today, is pretty simple. Is now a good time to buy Kindly MD? We're looking at what seems like a compelling, but definitely a complex turnaround story here. It involves this high-stakes pivot to a Bitcoin treasury model. So our mission is to unpack the company's recent financial shifts, look hard at its unique competitive edge, and really focus on the critical catalysts coming up that, well, might just dictate its next big move. If you find this analysis useful, please do hit that subscribe button, give us a like, it really helps. And leave a comment below with any questions. Oh, and definitely if there's a company you want us to look into, drop it in the comments below. We're always looking for ideas.
Yeah, and what's really fascinating here, I think, is just how bold this transformation is. I mean, this isn't just dipping a toe in the water. Kindly MD has basically remade itself into a pure play bet on institutional Bitcoin adoption. It's like they've burned the boats on their old business model, and that's exactly where all the drama, the volatility, and let's be clear, the potential for significant upside really comes from.
Okay, right. Let's unpack that core idea then. This is, like you said, a fundamental transformation. They looked at the old clinic model and said, nope, not working. It just changed everything.
That's exactly it. And the data, it shows a very deliberate strategic move away from those traditional healthcare operations. You know, running clinics, staffing, dealing with insurance, probably pretty low margin stuff. They're moving towards higher margin, more capital efficient Bitcoin treasury activities. And the financials sort of reflect shedding that old skin. You see their trailing 12 months revenue, it's down to $2.24 million. That's a drop of nearly 28% year over year from $2.72 million. But that decline, it isn't really a failure of the old business. You know, it's management actively stepping away to focus totally on deploying capital into Bitcoin.
Right, but pulling off something that aggressive, you need serious backing. And they've shown this, frankly, remarkable ability to raise capital, securing, was it $742 million in funding specifically for this new Bitcoin strategy?
Yeah.
That's a huge war chest.
A massive injection, yeah. And it directly ties into their market position now. This whole shift was kind of formalized back in August 2025 with that merger with NAKA Holdings, which is a Bitcoin native holding company. So structurally, you've got this former healthcare entity fused with a crypto investment vehicle. It positions them perfectly, really, to capture that institutional Bitcoin wave, but it definitely means the stock trades completely differently now.
Okay, so given that huge pivot, let's look at the financial foundation. Because blowing up your old model sounds risky. But despite that operational risk, they seem to have maintained pretty impressive financial strength. Total assets are $9.89 million. Good liquidity, too, $6.02 million in cash and equivalents. And crucially, that debt-to-asset ratio looks really low, only about 5.6%.
Yeah, and this is where you see the market buying into the vision, right? It's not just a tidy balance sheet. Its proof management convinced some serious capital to back this radical new direction. Stockholders' equity strengthened dramatically to $8.97 million. And you really have to grasp, they were starting from a negative equity position, minus $108,000 back in December 2023. That turnaround, it's a huge financial achievement, signaling powerful backing for the Bitcoin strategy.
Okay, now the core asset, the thing that makes this whole story unique, the Bitcoin treasury. They've built up, over 5,700 Bitcoin. At current prices, that's roughly $410 million. So here's where it gets really interesting, right? It's like this tiny company, based on its old revenue, suddenly has this enormous vault of digital gold. That structural mismatch creates huge embedded value.
And that asset base is their main competitive advantage now. They're basically one of the only publicly traded pure play Bitcoin treasury companies. So for retail investors, it offers accessible exposure. And their financing setup is quite strategic, too. That $5 billion at the market program, the ATM, that's key. It lets them flexibly raise capital by selling shares directly into the market, but not all at once. So they can basically raise cash opportunistically to buy Bitcoin during market dips. It's a mechanism to buy the dip much faster than a traditional offering would allow.
Right, flexible financing, strong assets.
Yeah.
But how's the market actually reacting? How's the stock behaving? It's currently trading around $1.10. But look at this 52-week range, $0.65 on the low end, up to $34.77. Wow.
Yeah.
I mean, let's be real, though. That $34.77 high means it's trading, 97% down from its peak? That shows just how brutal the volatility can be. How much of that ambitious $8 price target is fundamentals and how much is just, Bitcoin hype?
Well, it's definitely a mix, no doubt. But the technicals do suggest some conviction in this narrative. Trading volume is high, 38.4 million shares. That signals a lot of investor interest, for better or worse. Analyst sentiment is still holding strong with a strong buy rating. And that $8 target, yeah, it implies massive upside, like 684%. The analysts projecting a $1.10 to $8 range in the next 3 months suggests they see these upcoming catalysts as pretty likely triggers. But you're absolutely right to flag the volatility. I mean, this has been a roller coaster. Remember that event back in September 2025? Shares just plummeted like 40% after they announced their subsidiary, Nakamoto Holdings, planned to invest up to $30 million in Metaplanet, that Tokyo-listed Bitcoin treasury firm.
Wait, 40% sell-off. What spooked the market so badly there? It sounds like a strategic investment, doesn't it?
Well, the fear was, I think, that they were shifting strategy. Moving from just holding Bitcoin to actively, maybe riskily investing it. It wasn't really the $30 million amount itself, it was the signal it sent. The market worried they were putting liquidity into a non-core, maybe illiquid asset. Raise governance questions, basically. Like, are they overextending? Are they straying from the pure play story? It just shows how quickly the market punishes any perceived deviation from that core treasury model.
Okay, makes sense. So the market demands focus.
Exactly. Which makes these next 3 to 6 months absolutely critical for validating the whole strategy and calming those governance fears. First big test, the Q3 2025 earnings report, expected around November 11th. With that current negative EPS of -$0.86, investors desperately need to see proof. Proof that the Bitcoin strategy is actually hitting the cash flow line, not just boosting asset value on paper. Are costs under control now? Are they monetizing efficiently?
Okay, Q3 earnings, got it. Then there's that major financing deal they just announced in October 7th, right? A strategic partnership with Antalpha, establishing a $250 million convertible debt facility. It's a 5-year secured convertible note. Hold on, though. Convertible note means potential equity conversion later, right? You mentioned earlier this structure is meant to reduce dilution risk. That sounds backwards. How does trading debt for future shares help now, especially if Bitcoin and the stock price climb?
That's a really sharp question. The context is absolutely key here. This new Antalpha facility is designed to replace an older, probably much more restrictive $203 million Bitcoin secured credit line. That old line likely had tough margin calls tied to Bitcoin's price swings, high collateral needs. So by swapping to the Antalpha convertible note, they get immediate stability. They reduce the near-term risk of being forced to sell Bitcoin low to meet a margin call. That's very stabilizing today. Yes, there's potential dilution way down the road, but the bet is that dilution happens at a much, much higher share price, making it acceptable to today's investors while securing the present.
Okay, that makes more sense. Trading near-term risk for potential future dilution at a better price.
Precisely. And then finally, you have the market dynamic catalysts. Bitcoin historically often performs strongly in Q4, if that happens again. That Q4 strength could mean substantial mark-to-market gains on their 5,700 plus Bitcoin treasury. That flows directly to the book value, improves the metrics, and could attract positive attention right before year-end reporting.
Right. And then there are always the rumors swirling around these kinds of stocks. We've heard speculation about maybe using some of those Antalpha proceeds for more Bitcoin buys. And that persistent chatter about spinning off the old legacy healthcare division completely to make it a truly pure play Bitcoin company. That could definitely unlock value for investors wanting the purest exposure.
Okay, so lots of potential positives, but let's get real about the risks. This is obviously not a stock for the faint of heart. It feels like it's trading entirely on this pure play narrative and momentum, not traditional earnings multiples. What are the big pitfalls people need to watch out for? Well, the main risk is structural. It's inherent. Bitcoin price volatility, it's magnified here. Think about it. A relatively small company leveraged onto this massive volatile asset base. When Bitcoin drops, say, 10%, Kindly MD could potentially lose, in mark-to-market terms, something like 18 times its current annual legacy revenue in a single day.
Right.
That volatility creates enormous risk for the Treasury, potential for catastrophic losses in a serious crypto bear market. That's risk number one. Number two, ditching the healthcare operations. That eliminates what was, at least a predictable, if thin, revenue stream. Now they're totally reliant on capital markets and asset appreciation. And third, despite the new financing deal, there are still liquidity risks. Holding that much Bitcoin isn't simple. And there could be redemption pressures from those convertible securities if the stock price doesn't perform well.
Okay, huge potential, huge risks. So summing it all up, based on everything we've looked at, the balance sheet turnaround, the massive treasury, that innovative financing, the aggressive positioning, what's the final verdict? Well, the overall rating from the analysis seems to be bullish, maybe an 8 out of 10. The rationale is pretty clear, isn't it? It represents a very high conviction bet on institutional Bitcoin adoption. It offers that significant asymmetric upside backed by the assets, and a capital structure designed hopefully to handle the swings and capitalize on dips.
Yeah, and that high conviction points towards a specific investment horizon, or maybe two ways to play it. Look, it definitely offers chances for short-term traders playing the volatility, but the next 3 to 6 months seem like a particularly interesting window. That's when the company executes this Antalpha financing transformation and potentially gets that tailwind from historical Q4 crypto strength boosting the treasury value. So timing your entry around Q4 could be critical here. And maybe a final thought, connecting this back to the bigger picture, that new $250 million secured convertible note from Antalpha, it really is quite an innovative sort of Bitcoin native financing structure, designed specifically to reduce that immediate dilution risk. So it raises a really interesting question for you, the listener, to think about. Could this model trading secured debt for future equity actually set a new standard? Could we see other public companies globally adopting similar strategies to manage and finance their own large volatile crypto holdings without having to rely solely on those traditional, often highly dilutive equity markets right away? Something to mull over.
That is a fascinating angle, a potential shift in how companies handle crypto on their balance sheets. Well, thank you for joining us today as we navigated through all this material on Kindly MD. It's complicated, it's volatile, but potentially very rewarding. We hope you feel much better informed about this unique investment situation. We'll catch you next time on Investing Talk Podcast.